So this is ThinkTankStormFX. Here we study and also learn how market moves in ThinkTankStormFX. If you want to join us, we have a Telegram group, always open, public and private. And also if you want to learn, we have different websites where you can be able, just type ThinkTankStormFX in the browser, you will be able to land on our websites or web pages, so you'll be able to learn more about trading if you are eager to learn trading. So today our topic is market structure. Market structure is the backbone of the movement or movement of the market. So we have it consists of several points. We have swing points, pullback, valid pullback, internal structure, and then change of character, and then break of structure. So those are points that consist inside the market structure. So when move forward, there's a structure I have demonstrated here, a beginner's structure mapping, whereby market a structure mapping, and then when market moves, does not move in a straight line. It moves in the zigzag format, a run and then pull back, run or expansion, a pullback. So this is what I mean. Market pushes up in expansion, creates a higher high, pulls back and break the previous lower low, maybe here, and that one we call it a break of structure to the downside. And market creates what we call swing points. These blue circle structures are called swing points, and at the lower point here we have what we call the liquidity, and this liquidity is called the buy side sell side liquidity. Then when market pushes up and breaks the previous higher high, it causes, or it, we call it in SMC, we call it a change of character. So when this happens, which means now we are in a bullish phase. So market creates a new higher high, pulls back to create a new lower low, which is another swing point, pushes up to create a new higher high, causing another break of structure. This means that market is ready to push to the upside. This indicates that the market is in a in upward trend. So this is the beginners who have to market structure. So there's something which is unique here. When is the market ready to shift from uptrend to the downtrend? So when market creates a new higher high here, it pulls back to create a new lower low, causing this to become a clean break of structure to the upside. So then when market pulls back and then creates a new higher high, and the candle closed above this previous high, causing a break of structure. But unfortunately, instead of market coming to this point and then pushes back to create a new higher high, but now here it breaks the previous lower low here. When it breaks this previous lower low with a candle close, remember that with the candle close, this is indicates a change of character or a market structure shift, which means now we have shifted from uptrend to now to downtrend. You get the point. So when market moves down, it will create a pullback to fill all the inefficiencies inside the range of the higher high and then the lower low. So market start to pull back, creates a run, pull back, run, pull back. And when you look on this, when market moving in the lower in the downtrend, it leaves on lower high what we call the liquidity resting above this point, which is called the buy side liquidity. So this is what I can be able to say on this phase, which is called the beginners mapping. So on the beginners mapping, this is what currently we have. So